we're getting conflicting views from within the board. How do you think the Fed would manage, and communicate with the markets going forward on its intent and how they plan to contain inflation? And what would that mean for the dollar?
Well, first of all, if I look at the FX market, there are three factors that we should look at. Number one, as you mentioned, the central banks. And here, the Fed probably is the one most on steroids, I would say, in terms of normalizing. I think it took them a long time to shift towards a more hawkish till finally we got there. And I think they're not going to let go. Inflation is a problem in the US. They need to tackle it. And so that is probably the most secure bet that we have where that trajectory is going to go. The other element to think about is what is growth doing? We know that we go into a little bit of a lull, and I think we need to look at this a little bit in conjuncture. So you can't just look at the central bank move and without really tackling the fact that we're going to decelerate probably into the second quarter. And that's the second one factor we're looking at. And the third one is really, it's all about commodities. That's really a key factor, big shift in balance of payments. And if we add all these three factors up, I think the dollar is quite good position. And that's why we're looking at dollar strength, I would say, into the second quarter, probably the DXY going again above 100.
And if you're saying it's likely to go above 100, what would that mean for emerging market currencies? Because, typically that has been bad news for how EM assets have performed.
Well, it is a challenge for sure. So if you look, for example, at dollar CNY, we think what we just saw on the trade data from China clearly points, well, a firm current account, firm trade surplus, but you look at obviously the weakness in imports. So dollar CNY for us is something that should inch towards 6.4, 6.45, so it's a modest decline. I think everybody that has no commodity connection at this point in time should weaken. So obviously Indian rupee should weaken, and we also see the yen potentially even going further higher. So there is additional weakness here across the board. Not everywhere, as I mentioned, commodities still probably hold the line. For example, Australia, you're going to see growth accelerating. It's going to be a different story all along. I think the market will honor that and push the Aussie further up. So there is obviously divergence, but overall, you're right, Asian currencies probably still going to be under pressure in the second quarter.